And I want to talk about three specific things. One of them is what's called an economic injury disaster loan. And that is not part of the CARES Act. That was part of Stimulus Bill 1. And then I want to talk about two provisions within the CARES Act that can help your members. So quickly on the economic injury disaster loan. This is a specific loan program that is put in place by the SBA to help businesses when there is a disaster. And this could be a hurricane, a flood, an earthquake. It is a very specific disaster relief program. It is administered completely through the SBA. Banks are not involved in this economic disaster loan program. You have to apply direct to the SBA. And those funds can be used for any basic impact from that disaster. It is not specific to payroll like the Paycheck Protection Program, which I'll talk about in a minute. Also important to note on this economic disaster program, it is an actual loan. It has to be paid back. There's no forgiveness provision. So you will need to go to the SBA website to apply for that economic injury disaster loan direct through the SBA. There are some pieces that are important. If you get an EIDL loan and you use it for payroll, that is limiting on your PPP loan. So there are some complexities to it, and I just wanted to use kind of a high-level overview right now. So again, on the economic injury disaster loan, that needs to go direct through the SBA to apply for a complete program. Now talking about the CARES Act, which was just signed into law a week ago Friday. Two important provisions of that act that are important for people to know. Number one, if you have an existing SBA loan, it's already in place, a provision in the CARES Act is going to take care of your payments for the next 6 months. So that's a great benefit for business owners. As of April 1st, the government will be making payment direct to banks for existing SBA loans. Now you will want to coordinate with your bank because banks have to coordinate with the SBA to get this facilitated. We know that some banks are on automatic payment, or some loans are on automatic payment. We have turned off all automatic payments at our bank. When payments come in, we are talking to the client whether they want that money back or applied to the loan still. But as of April 1st, all SBA 7A loans in the country are going to have their payments made for them for 6 months. And understand, this is a grant. This does not have to be paid back. It is not a deferral. It is an actual grant. And it is my understanding that that will be a non-taxable grant to business owners. This is great. It should get you 6 months, hopefully, over this hump so that business can restart and can start generating revenue again. So that's the 6-month payment process. The next thing I want to talk about is the important Paycheck Protection Program, or we call it the PPP loan. The provision of the CARES Act that focuses on the PP Act is really focused on one thing: getting employees back on the payroll or having you retain employees. So at a high global level, the intent of this program is to provide funds to businesses so that you either retain your existing employees or you rehire employees that have been laid off as a result of COVID-19. The basic calculation is you need to determine what your average monthly payroll spend is. And then you get an average monthly payroll times 2.5 is the amount of the loan you can apply for. There's a lot of definitions around what constitutes payroll, and it is available via the website for the SBA. But in general, it is wages, salaries, commissions, bonuses, tips, benefits, state and local taxes. Anything that is revolved around paying payroll is included in that calculation. So usually you go to your tax filings, your 940s and 941s. That is going to be your payroll tax reporting mechanism. If you look at all of the payroll expense last year for all of 2019, divide that by 12, that is your average. You then multiply that times 2.5. That is the amount of PPP loan you can apply for. So that is how you figure out the amount. Once you are awarded that amount of money, the intent is you will use that for payroll. So to the extent you do use it for payroll, that portion will be forgiven. And again, that is a grant. You do not have to pay that portion back. and it is a non-taxable event to you. Once you get the money, you can use it for other qualified purposes, which would include rent, mortgage payments, interest on debt, benefits, and insurance. That portion is not forgivable. As Joe talked about, whatever is not forgivable, this will be a 2-year loan at 1% interest. And again, with the first 6 months of your payments, you don't need to make them. The government's going to make those payments. So just kind of recap. You need to figure out your average monthly payroll. You get 2.5 times that. The intent is to use it to either keep people on the payroll or rehire people. And to the extent you use it for that, it will be forgiven. Now, Joe also mentioned about timing. We know that all restaurants, most of all in California, have been shut down at this point, at least for walk-in business. I did hear yesterday that a provision of the bill, or I guess guidance on the bill, is the 8-week period under which you need to continue to pay your employees will start from when the loan is dispersed to you, not from when it is approved. We know that restaurants may not be open at this point, so it is my understanding that they are going to allow you to wait to get that money until you reopen. Then you will have an 8-week period to keep people on the payroll, and that portion will be forgiven. Now, I talked a little bit about the forgiven piece. You're going to get 2.5 months worth of salary, or as of payroll. As long as you use it for payroll over an 8-week period, that will be forgiven. There is no guidance today on how that process is going to work. Right now, the SBA is really solely focused on getting the money out to small businesses. We will get guidance on the forgiveness calculations within the next couple of weeks. Depending upon where you get your loan, and I suggest you all go to your own personal bank. That is your #1 source to get this PPP loan. The SBA just activated 30,000 institutions, banks, credit unions across the country over the weekend to allow them access to this program. There are a lot of banks that are only allowing customers to apply for the loan. Now, having said that, there are some challenges here. I know Wells Fargo is under a regulatory federal guideline cap. They reached their cap either last night or yesterday. Wells Fargo at this point, they've reached their $10 billion in funding and they cannot fund any more loans. That is a regulatory issue. So trying to find an institution that will allow non-clients to participate. We at Seacoast, we are not processing our loans ourselves. The volume was just too massive for us. We averaged 25 to 30 loans a month. In the first day of our program, we had 1,100 loans go through our system. Well, again, we are not doing it going through Cabbage. Cabbage is a national that is setting up and gearing up to specifically do this PPP loan for people. There would be no way for us to manage these ourselves because of the volume that we typically do. We couldn't do it. That's why we are referring all of our loans to Cabbage. And while they are not a direct SBA lender, meaning they're a non-bank lender, they are a fintech company, they do have an affiliation with a bank that is going through their process. That's slower. Under the CARES Act, fintechs can apply to go direct to the SBA, and that application is in. That they couldn't apply until the SBA actually released the actual application, which I believe was today. But that is in process as well. Treasury, SBA, everyone understands the importance of getting this money out, so they are opening up to as many channels as they can. So again, I talked about how much you can get. 1 month's worth of payroll times 2.5. Apply it to current bank if you can. Once you get the money, you can make the decision when to have those funds dispersed. You will then have 8 weeks to use that money for payroll. If you use it for payroll, that amount will be forgiven. If you don't use it for payroll, but you use it for other qualified expenses, that will turn into a term loan over 2 years at 1%. And I hope that covers the general of the PPP program.
Yeah, Rick, can I jump in with a few questions that might help folks? First, I think people interpreted the Treasury guidance to say that if you spent the loan, if you use the loan proceeds for the permissible items, payroll, rent, utilities, interest on mortgage, interest on non-mortgage debt, that all of that was eligible for forgiveness so long as 75% of it was for payroll. Are they now saying we're only going to forgive payroll and we won't forgive what you use for rent, utilities, et cetera, up to that 75% requirement?
Our interpretation of the guidelines is you can use it for all those eligible things, but they're only going to forgive the payroll piece. So the comment that if you use 75% of it for payroll, I think we're saying the same thing. They're going to forgive the payroll portion, but they really only think that 75% is going to be used for payroll. I think of it this way. They're going to cover payroll for 8 weeks, which is 2 months, but you're getting 2.5 months worth of your payroll in a loan. So just the basic math is you get 2.5 months, you're going to use 2 months for payroll, the other half a month you can use for other eligible sources, but just the payroll piece is going to be reimbursed. That's really the genesis of this bill, Joe. They want people back employed and off of unemployment.
I understand what you're saying. I just think there's a lot of people out there that are operating under the assumption that if I get $100 loan, so long as I use 75% of it for $75 for payroll and $25 for rent and utilities, I get $100 forgiven.
Yeah.
And you're saying it's just the payroll part.
Right.
Okay.
I'm getting.
Sorry, Rick, do you want to finish that?
Yeah, just the remaining $25 will be a 2-year loan at 1% interest.
Okay.
And then how does that work? Because there's also a provision in the law that talks about reducing the amount forgiven based on your relative percentage of full-time equivalent employees. And I think the numerator of that fraction is your average number of full-time equivalents per month during the 8 weeks after the loan is dispersed, divided by your choice, the borrower's choice, of the average monthly full-time equivalents from February 15th of 19 to June 30 of 19, or from January 1, 20 to 2/29/20. So I have to factor that in too, right? If I've had if that fraction is less than 1, right? I would get a further reduction in my forgiveness amount, even though I used it for payroll.
Yeah, Joe, a lot of us are trying to interpret what guidance we've gotten on the forgiveness piece. I will say this, we know the basics. We need to wait for further guidance from the SBA, and we don't expect that for potentially a week or so. As they're fully focused on getting the money out, there will be a very detailed explanation, possibly even a worksheet on how to define the forgiveness piece. So we're all thinking we know what it is. I think it's probably best for us to wait until SBA actually provides us with the actual guidance.
Yeah.
Thank you.
You know, an interesting question just came in. Can a company pay, or can a company apply for less than the 2.5 months of payroll?
Yes.
Okay. And I'm getting the question a lot that you mentioned, Rick, about this Wells Fargo. They've shut down taking the PPP loan. These questions started coming in Friday, actually, and a lot of operators, business owners were upset with their banks. They had an account with their bank, but then if they didn't have, for example, Bank of America, I believe they had to have some lending relationship with the bank for it to be processed. I think B of A has changed that, but can you speak to that a little bit? And also, you know, what if the bank, the business owner's bank is not offering this loan if they used Wells Fargo and it's shut down already? What options are out there for people?
Yeah, I mean, honestly, it's a tough situation. I do understand that Bank of America may have, under extreme governmental pressure, has agreed to allow folks that they will now accept applications from folks. It's a tough situation. We are accepting non-applications, but it's not us, Seacoast. It's going through Cabbage. But that is an avenue. The tough part is, you know, there's a federal restriction on Wells Fargo. That is the U.S. government restriction. They could only do X amount of that, and they reach that cap in basically 2 days. So try your personal bank first, or your business bank first. If they can't, there are some banks around the country that are allowing non-bank clients to go ahead and process their loans. Like I said, through our link to Cabbage, and it's a referral to them. Their program, you do not have to be a client of Wells Fargo or a client of Seacoast, you can be a client of Cabbage. it is an avenue to go ahead and apply, but it's going to take some time. And I want to add here, a lot of business owners are sole proprietorships. You cannot apply for a PPP loan until April 10th if you're a sole proprietorship. They had to stagger application processes. So small businesses started on Friday, sole proprietorships start on April 10th.